So what even is a bond? Bond is essentially a loan made by an investor to a borrower. Borrower meaning like usually a company, a government, or some other kind of organization. The borrower essentially promises to pay back the loan at a set future date. Usually with bonds, they take years, but it all depends. And the borrower agrees to pay a set amount of interest for taking that money from the investor. So let's just say you lend $1,000 to a company and the company agrees to pay you 5% APR interest per year. After 10 years, you'll have $1,000. All right, so now let me break down like the key parts of a bond. I basically just explained what a bond is completely in very simple terms, but now let me talk about the technical shit. First, face value. That's literally just the amount you lend to the borrower. Next, coupon rate. That's the amount of interest you're earning for giving the money to the borrower. Usually it's paid yearly. Maturity date. That's the date that the borrower will give you back all your money. All right, next, price. Bonds can basically be bought and sold before the maturity date. And bonds are like really similar to like stock shares, as in like you could buy a set amount of them. Yeah, as interest rates go up, bond prices usually go down. And it works the other way too. Now let's talk about who invests in bonds. Why even have a bond? Bonds are really popular with like a few different types of people. First is like normal individuals. If you're looking for steady income, super reliable, especially government bonds. If you put your money in a bond, that money is safe if it's a government bond. I'm not a fucking financial expert, so don't go like buy some Indian bond and lose your whole life savings in an Indonesian bond. But yeah, generally they're seen as safe. They're seen as reliable. It's great for setting money aside for a retirement fund. All right, next is institutions. Banks, insurance companies, pension funds, mutual funds, that kind of stuff. A lot of these companies, they invest their money in like different ways. They might have like a sector where they do like higher risk investing. They might have a sector where they do like low risk. If they just want somewhere to park their money, bonds are perfect because you park your money, you get interest. When they're like a big organization, they can make special deals to where they could get shares or like bond prices like lowered because they're buying in like high volume. Next is governments. A lot of governments actually invest in each other's bonds. Japan buys US bonds, China buying US Treasury bonds, UK buying US Treasury bonds. A lot of companies buy US Treasury bonds because we're like the number one right now, but it's not like the US doesn't buy like fucking China bonds, or and sometimes they'll even like go into emerging countries bonds. So now you made it this far. Now let's talk about how you could actually invest in a bond. You first have to go through a criteria of things you want. So you could choose like a safer bond, a less safe but higher income producing bond. Yeah, you have to decide like whether you're okay with your bond fluctuating in price a bit. So let's just say you want to get a government bond. I'm sure there's multiple ways you could do it, but one way is by going to Treasury Direct and literally just buying the bond on like the US Treasury Direct website. Don't worry, it's all safe. Make sure it's the treasurydirect.gov website. And then if you want to buy like a corporate bond, you'd have to go through like some kind of brokerage. You can go through an online brokerage like Fidelity, Charles Schwab. It doesn't matter. I would thoroughly do your research though and like actually find out which bond you want to choose and why, because it's a big commitment, you know? And yeah, I appreciate you for watching. Thank you so much. Have a great day. Bye. Be smart.